Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 14th of May 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. An interesting day as far as the foreign exchange were concerned. In fact, an interesting day around, let's be honest. We saw little in the way of major currency movements in Europe, both the euro and the pound sterling relatively static against the US dollar. But in Australasia and Asia, currencies were moving. The Australian dollar down by 0.33% against its US rival, and the Kiwi following suit down by 0.27% against the US dollar. Interesting to note that any sort of positivity that we had around the Aussie from last week has disappeared now. Both the Aussie and the Kiwi down over the last 7 days. However, they weren't the only currencies moving in Asia. The Japanese yen took another 0.15% off of the US dollar yesterday to trade at 109.77. Moving in the other direction, the Chinese yuan slipping by 0.68% as the dollar strengthened to trade at 688.85 shortly before we recorded the video. The dollar was also on the front foot against trade-related currencies such as the Canadian dollar and Mexican peso, as we can see here, up by 0.18% and 0.27% respectively, but also in emerging markets, taking money off of the Indian rupee and the Brazilian real, around 0.28, 0.29% there against those currencies. And the dollar was on the front foot once more as well against the South African rand, of course, a trade-related currency and a poster boy for emerging markets, where the dollar took 0.52% off of the rand. Interestingly, though, dollar index largely unmoved with just a 0.01% gain on the session. Okay, then, what's on the calendar? Events that may move the markets today. A pretty busy calendar, not too much high impact data, but plenty for us to get our teeth into nonetheless. At 6 a.m. GMT or 7 o'clock London time this morning, we'll have wholesale price index data out of Germany for the month of April. That'll be joined by harmonised index of consumer prices data for the month of April, so the first of a number of inflation reads there from Germany. Standard CPI data as well for April, and two other measures of HICP and CPI released there as well. Then at 07:15 GMT, a very early speech from central bankers to kick the day off, and this from the Fed's Williams. Then we pause until 08:30, crossing back into London for some unemployment and earnings data. So we've got average earnings data, including bonuses for 3 months to March, unemployment data for the 3 months to March as well, and then claimant counts and claimant count change data for the month of April. In the UK there as well. Then at 9 a.m. we're back in continental Europe for the ZEW survey data out of Germany, both economic sentiment and current situation reports here for the month of May, so a chance to see how German economic lookers, or watchers I should say, are feeling about the prospects for the German economy going forward. And at the same time we shall have industrial production data out of the wider Eurozone, both year on year and month on month data. These figures for the month of March. And we'll also hear again from the ZEW survey, this time about economic sentiment for the month of May across the whole of the Eurozone. We pause then until 10 a.m. this morning, and we have our first data out of the USA in the shape of the NFIB Business Optimism Index for April. And then a further pause until 12:30 GMT. We stay in the States for import price and export price index data. And then at 12:55, we shall have the Red Book Index for the week of May the 10th. A pause then until 16:45, when the Fed's Esther George will be giving us the second central banker speech of the day. And at 20:30, if you're still in the market this evening, you can see the release of the API weekly crude oil stocks for the week of May the 10th. Okay then, breaking news and comment that's caught my eye overnight. First of all, as you're probably aware, US equities have sold off hard on a trade war concerns. Donald Trump is said to still be in two minds about another round of tariffs on $325 billion worth of Chinese goods, which would basically mean tariffs on all Chinese goods if those were implemented. Australia's NAB Business Confidence Index remained depressed in April, coming in at 0 versus forecast for a read of 1. And compared to the prior read of -1, so another I would quite call it a body blow, but another disappointing number for the RBA to consider in its deliberations. Meanwhile, UK PM Theresa May is to hold a crisis cabinet meeting today as Tory rebels insist that she break off fruitless Brexit talks with the opposition Labour Party, so a further twist in the ongoing Brexit saga there. And we've seen mixed messages from regional Feds overnight. The Boston Fed suggesting that rates in the US can move lower on tariffs and other market forces, while the San Francisco Fed says the chances of rates moving to post-crisis lows are themselves low. Okay, food for thought then, and something to take away with you into the trading day and beyond. And why not think about this? I've drawn two charts related to US equities here and asked, do they show a change in sentiment towards US equities? So the first chart, a simple daily chart of the S&P 500 or US 500 index. We can see the price action here over recent sessions, moving firmly below the 50-day moving average yesterday, and testing in the direction, shall we say, at least, of the 200-day moving average. Our second chart, this one from Earnings Scout, takes a look at the evolution of S&P 500 earnings expectations for the second quarter of 2019. You will, of course, recall that we were just in the middle of Q1 earnings seasons. Markets, of course, forward-looking, and they've turned their attention to Q2 earnings, which will take place in the early to middle part of July. And as you can see, the evolution of those of the expectation of earnings growth has declined rapidly. So the question I've got to ask is, do these two charts signify a change in sentiment towards US equities? I think we'll need to see how we fare today as far as US equities are concerned to decide about that. But certainly markets must be thinking about the future given the events of the last couple of days. Okay, it's risk warning time. Please do take a moment to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do please take the time to read this risk warning thoroughly. Thank you for your time today.